But let's get you a sense of the top stocks that are on NDTV Profit's watch list today. So, first up, Godrej Properties has launched a QIP at a floor price of 2727 per share. We are giving it a green because if it gets subscribed well, which is what the market circles say, then the stock does have a chance of reacting positively. So, difficult to call that one, but we're calling it a green. KC International, certainly positive news. Good order win again, takes the annual order inflow, YTD order inflow actually, to over 16,000 crores. Good going for that one. Waaree Renewables has got back the solar project worth 1233 crores, should be construed positively. Hardco has a 600 crore MOU with NBCC, actually could be constructive for both, by the way. And Philips Carbon Black, erstwhile Philips Carbon Black or PCBL, new chemical unit in Andhra Pradesh worth an investment of 3,700 crores. Certainly a thumbs up.
And more greens today, which is great. Sonata Software received a multi-million-dollar deal in Australia. The stock's also been quite positive. Shaily Engineering is one which we're looking at. Motilal Oswal Mutual Fund has bought 0.5% equity at 1,251.69 paise per share. For Colgate, it's a thumbs up because Jefferies has rated it with a buy and a target price of 3,570. That's a 21% upside. Just one negative on the list, LTI Mindtree. CLSA went to their investor day and sees limited margin levers. They've maintained and underperformed with a target price of 4,974 rupees, which is a downside of 21%.
Well, those are a whole bunch of stocks that are on your watch list this morning. There'll be action, and it's going to be stock specific as expected in today's day of trade as well. The big story is Godrej Properties. Now, whether this gets a thumbs up or a thumbs down is a little bit of a debate. But what we do know that it's been of interest in the last couple of weeks and months now from most institutions. Godrej Properties is taking advantage of that and looks to raise 4,000 crores via QIP. Anushi is standing by with more on it. Anushi, how will the fundraise and growth for the company play out? What are you analyzing?
Hey Samina, so the 4,000 crore of fundraise that Godrej Properties is making is definitely in focus today. They're doing this at a floor price of 2,727 per share, which if compared to yesterday's closing price is at a 4% of discount. The issue price also they've said will not be more than 5% discount to what it is. In the earlier update, as mentioned, the company had received board approval for raising funds up to 6,000 crore, of which we are seeing this 4,000 crore of an issue in today. But what essentially the business aims to utilize for first is funding the further growth opportunities for the business. That means more land acquisition that the business can be looking out for. Also, they want to maintain and capitalize on the current market opportunities there. Even if you go back to the conference call and see what the management was indicating, they had said that if they look for any opportunities in the Mumbai portfolio or any of the other regions, they would be deploying these funds for those purposes as well. On the debt side, however, there was no indication if these funds would be utilized to reduce the debt levels of the companies. So, considering this fundraise which is happening, the management, the promoter stake would see about a 5% of a dilution in stake that is there. But how the company has performed in the H1, let's get a perspective on that as well. They've achieved 51% of an annual guidance in their booking value. Pre-sales was definitely on a stronger trajectory for Godrej Properties. They saw 90% growth at 13,835 crore of pre-sales number. Collections also 47% of what they've achieved in H1 of their annual guidance. 63% of annual guidance that they've achieved for the business development side. They launched 10 new projects year to date in FY25 with an estimated booking value of about 17,000 crore. So collections also saw 62% of a growth, and operating cash flows saw about a 200% growth at 2,800 crore. So future growth opportunities for the business on to capitalize on that is something that we should be watching out for Godrej Properties, and it would remain in focus in trade today.
For that, Anushi, it is a stock to track in today's day of trade. It did go home with a cut of 2.5% yesterday. Remember, the QIP gets launched at a 4% discount to yesterday's close. So we'll wait and see whether this is an up or a down on the counter. Shrikant Chauhan now joins in, and Aditya Shah for a technical and fundamental view. Shrikant, I'll start with you. What is the trade on the Nifty? If we get a flat start, I think a fresh long could be initiated, assuming you'd keep a stop loss of 24,000. Is that what you're thinking as well, or you'd avoid a trade on the index?
Good morning, Sumira. Good morning, everyone. I think, see, like Nifty has taken a temporary pause between the range of 24,350 and 24,100, 150 on the downside. But I'm of the view that after rallying 1,000 points, it is consolidating and it is preparing for the next move, which should be between the levels of 24,500 or 24,700, where the market is having resistance of 100 days as well as 50 days simple moving average. So while considering the overall activity of the market, I am of the view that yes, we should look for taking long bets in the market with a stop loss at 24,100. We can see the levels of 24,500 or 700. But if we see the market is crossing 24,350 at the beginning, then we can expect further more short covering on immediate basis. So based on option statistics, based on overall averages, I am of the view that yes, the markets are heading higher in the near term and we should look for taking some long bets. For the Bank Nifty, it is also consolidating and it is preparing for the next move, but the breakout level is at 52,600. So above 52,600, we are expecting Bank Nifty to move towards 53,000 or 53,300 sort of level. At this level, it's a buy with a stop loss at 52,000 on the downside.
Shrikant, that's the trade on Nifty and Bank Nifty. What are your top trading ideas, stock-specific picks that you have for our viewers this morning? What are you recommending?
See, like all these stocks are, I mean to say, if we see the setup of the market, then as we are expecting further more upside, we need to focus on large cap companies. And in that, HDFC Bank is into all-time highs. It is trading comfortably above the mark of 1800, which is positive because since last almost 3-4 months, the stock has been like consolidating within 1800 and 1650, 1700 on the downside. So now it has broken this level and it is comfortably close above the same. So broad base formation is suggesting us that it is heading for at least 1880, 1900 in next few days. At this level, it's a great reward ratio for creating any long position. So with the stop loss at 1780, we should look for taking long bets on HDFC Bank. We also like Vedanta, which is around some 445 levels. And there also I'm expecting stock to move towards at least 460 and 470 in the best case scenario. Above 430, the stock is having like multiple sort of important support lines. And with a stop loss at 434, we should look for taking long bets on Vedanta. I'm expecting some activity, some more activity in all commodities. But in that, Vedanta looks good at this level with a target of 470.
So HDFC Bank, Vedanta, among the picks that Shrikant Chauhan has put out this morning. Aditya Shah also joining us, founder Hercules Advisors. Aditya, hi, great to speak with you. I'm going to start by asking your view on what we saw with the auto pack yesterday and whether you think that this is a trend that continues. Do you see a medium to longer term push for a revival in auto stocks, or at least let's take it till end of Jan when you're going to see many more launches coming?
Good morning, Tamanna. So we saw Mahindra and Mahindra launch their electric vehicle yesterday, and it's a pretty good and pretty impressive product that Mahindra and Mahindra has really got. As you know, I have a positive outlook on Mahindra per se. The company is really transforming itself. We've seen for the entire auto pack, inventory sitting an all-time high of about 1 lakh crores per se, and that will start to reduce as a lot of companies shell out a lot of discounts. Mind you, within the petrol products, companies are still offering discounts, and that will go on at least for the next 3 to 6 months per se. So you need to be very, very selective within the auto pack as to where you want to place your bets. As I have already been very vocal, Mahindra and Mahindra in the four-wheeler space and the auto tractor space continues to be really very good for us. Within the two-wheeler space, our top pick continues to be TVS Motors. It has been a silent performer over the last 5 to 7 years, and will continue to do so moving forward as well as the EV transition sets in. So the near term looks very difficult for the entire auto pack as they continue on this march of inventory reduction per se. However, within the longer term perspectives, these 2 to 3 companies look really very interesting to me, which is TVS, Mahindra and Mahindra, and Royal Enfield per se. For their, I'm very excited for their EV product that they will launch within the next year per se.
Right.
Okay. Well, the other set of stocks which have done really well yesterday, by the way, and are the Adani Group stocks. Big leg up in trade yesterday. And Shrikant, while we'll talk about your other ideas as well, but just a question on whether there could be more rally out there based on the charts into any of those names.
So the stock is like under specific news flow, and whenever there is a news flow, we see a good amount of volatility in the stock, and then it becomes very difficult for taking any specific short-term trade from that particular basket or on that particular stock. But yes, I am of the view that there are like a few companies in this particular Adani basket or group which are very close to their important support levels and rebounding from their important like averages and all. So in that we like Adani Power, Adani Ports, which is currently trading around some 1200 sort of levels. Yeah, it is around 1200 levels, and we can keep stop loss somewhere close to 1160, 1170 on the downside. There we are expecting 1350 or 1400 sort of levels. But for other stocks, we need to be like little bit careful because they have broken their important support levels, and the recovery is not that great as it should be. So I think still there is like a lot of confusion. It will take some more time. All the stocks will consolidate within the broader range, and then we can expect some upward activity. But yes, Adani Ports, there we have a bullish view based on fundamentals. Technically also, we are expecting further more upside in the near term.
Aditya, by any chance, good morning, of course, and by any chance, have you looked at this business called Shaily Engineering Plastics? Was up 18% yesterday. Motilal Oswal bought a large chunk at 750. They've topped it up yesterday, and from the looks of it, the growth numbers outlook seems positive. Any chance you looked at it?
No, Neeraj, so don't have an in-depth study on this stock, so will not be able to comment on it.
Okay, but maybe Shrikant, you can look at the charts once for us. Shaily Engineering Plastics was up 18% yesterday.
Yeah, technically it is showing a lot of strength. In fact, it is into maybe I can say a very strong bull run. Whenever there is a correction in the stock, it is not breaking its previous swing based on weekly, monthly charts. I'm going to say on long-term charts, and it consolidates and then it breaks on the upward side, which clearly indicates that the stock is into uptrend and it is heading higher. Yesterday we saw, as you said, rally of 18%. So if there is any correction, then close to important supports like 1250 or 1260. There we should look for taking some short-term bets. But broadly, I'm of the view that if there is any like specific investment or like somebody is really interested in buying this particular stock with a medium to long-term view, then certainly they should look for doing that because the stock is finally heading for the levels of 1500 or maybe 1550 in the near term.
You talked about Bank Nifty, but I don't think we mentioned HDFC Bank. If the stock gets a flat open this week, would you be inclined to initiate a long on HDFC Bank? And also, assuming the likes of an ICICI or Kotak or even an SBI may play catch up, if one wants to avoid a trade on the index, could any of these banking names become trading ideas for the day?
Yeah, HDFC Bank looks really strong candidate to buy for short term as well as with a medium term view. It has been consolidating within the range of 1800 and 1650, 1700 on the downside, and eventually it has broke that level and it is like now comfortably sustaining above the same. So based on technical formation, I'm expecting stock to move towards 1930, 1950 sort of levels, and in the near term, very near term, we can even see the levels of maybe 1880. So it's a buy at current levels with a stop loss close to 1780. For State Bank of India, there also I am expecting some bullish consolidation sort of formation. Although it is like still in the range, it has not broken the level of 865, 870, which is the breakout level. But in case if there is any correction around 820, 825, certainly we should look for taking some long bets on State Bank of India. We also like ICICI Bank, we like Axis Bank. Broadly, I am of the view that from the financial space, banks should be on the watch list for taking any short-term or long-term bets.
And private banks among them also seem to be preferred. But let's shift focus for a second to an FMCG major. The Colgate investor meet took place, and a couple of notes out this morning, some of them very positive on Colgate Palmolive. Mahima's joining us for all of those details. Mahima, what's the view coming in on Colgate Palmolive?
Right, Tamanna. So before I jump to the views from the brokerages, a few key takeaways from the investors meet. Well, the management has said that they will be focusing on driving volume growth with strategic pricing. So it will be a mix of volume as well as pricing growth, and the focus remains on driving the urban consumption overall. Management has target keeping margin within the historical range, so no change there. And they will drive premium as a percentage of oral care portfolio from currently 14% to 25%. And what they're saying is that quick commerce for Colgate, the market share and margins is very accretive, and they've launched an AI-enabled oral care movement which will kind of augur growth for the urban consumption. Lastly, they've proactively diversified via Palmolive and seeing a strong double-digit growth growing forward. Now, in terms of what brokerages are saying about the investors meet takeaway, Citi has retained sale with a target price of 3,000, but they believe that the driving consumer behaving change could be a tall task, and what they're saying is that near-term aspects of earning growths will be moderate for Colgate. Jeffries on Colgate has on the other side retained buy with a target price of 3,570, which is an upside of 21%. Oral care per capita opportunity is high, which is why they are banking on the growth. MK on Colgate has reduced with a target price of 3,000 again, and they believe that valuations factor is superior in terms of execution in the oral care. Lastly, Nuama has maintained an anti-consensus buy on Colgate with a target price of 3,825, which is a 27% upside from its yesterday's closing. And what they're saying is that Colgate shall remain in top tier in terms of volume growth. So this is the overall view and the key takeaways from the analyst meet of Colgate Palmolive.
That's what Colgate, and that is the reason why Colgate will be in focus on back of that analyst meet. Shrikant, a couple of other stocks that we'd like to talk to you about, and maybe you want to have a go. Godrej Properties, I'll add Trent to that list because it was showing some signs of strength or recovery in the last week of trade, and it seems to be quite the favorite in terms of trader interest. And let's throw in Colgate because that's in the news this morning on back of the analyst meet. So technically on the charts.
So like technically, Godrej Properties is like something which is indicating us that it is correcting from the highs. We may see some more correction, maybe close to 2,750 or 2,700. But the overall pattern is suggesting us that it is like something which is going to consolidate for the time being. The range in which the stock can trade is between 3,050 and 2,700 or 2,750 on the downside. So in case today, if we see the stock is dropping to 2,700 or 2,750, we should look for taking some long bets. But at the same time, on the higher side, the upside also limited, close to 3,000, 3,050. So it's a range-bound stock. For Colpal, we are expecting further more upside. It is into breakout mode. The stock displayed very strong run-up since the beginning of 2023. It was around some 1,400 levels. From there, all the way it moved to the levels of 3,800 without any meaningful correction on monthly basis, weekly basis. And now, like when there was like a correction in the market and in the FMCG sector, we saw stock was correcting from the highs of 3,800 to almost 2,700. So now it is into strong pullback mode, and furthermore upside is very clearly visible. If there are like any investments, then just hold on to it. I'm expecting stock to move towards 3,300 or 3,200 in the near term, and maybe a best case scenario. In the best case scenario, the stock can move towards 3,500. So certainly it's a buy. If there is any correction, but for trading, I think it is better to stay away because the overall sector is going to remain under a lot of uncertainties. So it is better if there is any correction to buy.
Okay, first pre-open rates, and of course we'll wait for them to settle. But trend-wise, what are we seeing? Adani Pack is opening up in the green. Power, green, energy, all between 9 and 12% up. Cochin Shipyard is having a second very good day. We were just talking about Colgate, about 3% up in pre-open, but of course all of those will change. KC International in focus, and we talked a bit about the order wins which have been coming in, and that's in focus as well. Aditya, what would be your take on the Adani Pack right now?
It is for highly risky investors per se, although some of the assets like Adani Port, Adani Power are really great assets. However, the news that comes every day can have a flip-flop on the stocks either ways, on the positive side of it or on the negative side of it per se. although Adani Group has clarified on whatever has happened in the US and with the SEC, only high risk investors who have very high risk tolerance can continue to invest in the stocks. For us as an investor, we are a clear avoid. We don't like to invest in stocks where we don't have an estimation of what is going to happen today, tomorrow, day after tomorrow. And mind you, none of these stocks are really cheap at this stage as they were 1 year ago when the Hindenburg crisis had played out. So I would like to clearly avoid these stocks, wait for clarity to emerge on what is going to happen in the US per se, and then try to invest in any of these stocks. However, you need to put on your watch list Adani Port and Adani Power. These are two companies which have really great assets, and any correction on these stocks would be a buying opportunity.
So Adani Ports on your watch list is what Aditya is saying. Just some of the others, mid-cap IT is having a pretty decent day. Sonata we spoke about, it was on our watch list as well, but look at Mastech, not half bad. Philips Carbon Black, just about 2% up. Now this is a particularly interesting company. I'm wondering, Shrikant, if this is something that you're tracking and you have any view on a PCBL?
Yeah, PCBL is also on our watch list, and it's a buy based on fundamentals. Also based on technicals, the stock has completed its corrective pattern somewhere close to 380, and now again it is rebounding. It was around some 580, 600 sort of levels, and from there all the way it corrected back to the levels of 380, 400. But now, based on its technical formation, we are expecting a pullback in the stock. The stock can move towards the levels of at least 450, 455 sort of levels in the near term, and in the best case scenario, we may even see the levels of 500 plus. So it's a buy with a positional view, because currently it is around 430 and we have to keep stop loss somewhere around 380. So it's a stop loss of 10%. But in case if there is any correction, then it will be an opportunity to buy for. So PCBL is on the buy list from our side.
Defense stocks have been in a sweet spot. It's not just Cochin Shipyard, but all the defense counters have been doing quite well as we see it. Cochin is up another 5%. Mazgaon trades marginally higher. BDL is also something that has seen an intake. We'll in fact talk to Zentech. I caught up with them yesterday, so we'll of course hear out what Zentech has to say about the outlook for the defense sector. And from what I understand, it's actually looking pretty good. Take a look at how Ashok Bilkon, Natco Pharma, KEC are doing, because all of these have bagged orders. Ashok Bilkon, after a fall yesterday, is up 2%. Natco Pharma on the land parcel sale trading with a gain of 1.4%. KEC, the start of the day, 4% higher. Hutco, NBCC have also bagged orders, so both those counters should be looking good in trade. Shrikant, trading idea, NBCC up about 1.5%. Hutco is expected to open up marginally higher. I'm assuming they may build on these gains as they go along the day. KEC International included, and Ashok Bilkon too. From any of these four stocks, pick one that could make a good long trade in the first few minutes if we get a flat start, because the news flow is positive.
Yeah, I think from the PSU basket, most of the stocks have formed double bottom or higher bottom sort of formation. I'm to say when the market was around 23,300, 200 levels, that time the market was at its lowest point of the entire fall. But all these PSUs made a higher bottom as compared to their previous lows. And that's the reason we are seeing some buying interest in PSUs, and they are outperforming relatively. They are doing better as compared to other stocks. So in that, yes, we like NBCC, which is around 97, 98 sort of levels. Here the stock has made a higher bottom at close to 87, 87.50. And based on its formation, I think it is heading for the levels of 103 or 105, which is like decent upside in the short term. So it's a buy at current levels with a stop loss close to 92, and we can expect 105 on the high side. Yes, we also like Hudco, we also like BHEL, but they are like far away from their stop losses. So yes, these stocks can also do well, but NBCC should be on the watch list.
PC Green, let's take a look at what it's doing in early minutes of trade. Yes, Swiggy has also had a very good run last few days on the back of a couple of brokerage upgrades, and so has Ola Electric. NTPC Green after a 12% move yesterday, it trades flat. Swiggy now at record highs, 508 on the count. Remember, the listing was closer to 414, and Ola Electric is up another 2%. We'll talk to Aditya about what he's making of these three new sort of themes the markets like. Brokerage note of the day, it's 9:05, and Varsha is here with more on what CLSA is saying about Star Health. Varsha, I believe the note is very constructive, even though there's no sort of target price been put out.
So yes, Samina. So if you see, CLSA had did ground visit and did deep dive with agents, regional managers and doctors of the Star Health. Post that, they have rated outperform to the stock with a target price of 590 with upside potential of 29%. The outperformance rating has been actually given based on the strong market position and operational efficiency. And the Star Health actually dominates Uttar Pradesh retail health insurance market with a 50% share and better loss ratios according to CLSA. Now, agents prefer Star for smoother processes and quicker turnaround times according to the brokerage firm. And Star actually launched the Pratham Hospital network, which will benefit both hospitals and customers. And UP, if you see, contributes 6% to Star's FY24 premium with 40 plus branches and 50,000 agents. And Star's loss ratio in UP is in mid 60%, which is better than the overall company's average. And lastly, CLS has also noted that the cohort-based pricing allows insurance to differentiate renewal price based on claims, which may help affordability but could penalize though with chronic illnesses.
Okay, Varsha, thanks for that. Interesting note, interesting thought, not a massive reaction, but not that it is anticipated that way. But Aditya, do you track Star Health? Is it an investable stock? CLSA believes it is. What's your view?
Neeraj, I have a very negative view on Star. Star has been losing market share in the retail side of it. Star has a massive problems on paying off claims. People are porting out their policies out of Star into other products per se. Although the valuation is cheap, the company needs to really work on the brand per se, on this image that has been created now of Star, that Star is instantly going to reject claims. Even doctors, even last month, Ahmedabad, the entire city of Ahmedabad blacklisted Star because Star was not paying up claims. Although they have a strong agent network per se, and it has emerged that now LIC is not going for Star, but it is most likely going for Manipal Cigna per se. I'm not too positive on Star until and unless the company changes its image, works on the claim settlement per se, and from there on we need to look at it. So not so positive right now. We'll wait and watch as to how the company proceeds over the next 6 to 12 months and then take it.
Right, that's the view, and I know that you're not much of a fan of Star Health or health as or insurance as a pack. But Aditya, coming in a few more names: Swiggy, new record highs, recent brokerage upgrades. Ola Electric, again yesterday with the new launch and upgrades, the stocks done quite well in the session. And you had NTPC Green that made a pretty good day for its very first day on trade. Any of these three counters that you like and you would buy and have in your portfolio if you don't already have them?
So my pick would continue to remain with NTPC Green and the entire green energy pack per se. That looks really very interesting. Something like a Vare, that also looks very interesting to me. What is happening per se in this space is that the government's push continues towards green energy, and all of these companies will continue to remain beneficiaries over the next 5 to 10 years per se. So NTPC, Vare, for that matter, Premier Energies as well. They spoke on NDTV last week. That looks really very interesting to me. Specifically on Swiggy and Zomato, I think the valuations are extremely aggressive on all of these companies. Although Blinkit has turned around for Zomato, Zomato's business could continue to struggle if the QSR space does not turn around over the next 6 to 12 months. That is really very important. Swiggy on its own hand is really struggling with Swiggy Instamart, whereas Zomato has turned around Blinkit per se. So in my opinion, I would tend to avoid Swiggy and Zomato per se. Both of them are really very expensive companies to buy. Coming finally on Ola Electric, as I have already said, although they are launching up the new products per se, still on ground challenges remain with respect to the serviceability of the fleet that they have already sold per se, and that is a real challenge for the company. So it's a clear avoid. Swiggy is a clear avoid. Ola Electric is a clear avoid. You can look at NTPC Green Energy or a Vare or a Premier Energy first.